Good morning. This is Dylan Giovanni with Behind the Markets. Happy Tuesday. Today is Tuesday, August 18th. We have quite a busy week this week. We have the Fed chairman speaking at Jackson Hole on Friday, which always makes the gold market and bond market trade a little funny before that happens. We have Walmart and Lowe's and other retailers, Target, announcing earnings tomorrow, which is always interesting. And little pro tip, little known fact, when Walmart announces earnings, it's actually often a better indicator of actual inflation than the Fed CPI rating, because it really listed on that Walmart call for unit price and average ticket, unit volume and average ticket, which tells you if consumers in aggregate are going down in their average transaction amount and volume. But the thing that really has my attention this week is gold. It's really pushing. And I have some notes here that I wrote for you that I'd like to discuss. It's really pushing toward record territory. A recent industry survey found that 71% of retail investors expect gold above 5,000 in 2026, with big banks like JP Morgan, UBS projecting similar levels. We've talked about it on this channel quite a few times. It's funny, when I was growing up on Wall Street, I met all these old timers. They were gold bugs. Gold, gold, gold. And gold was dead for decades. And I used to think to myself, what are you, like the last member here? I mean, you're wearing a members only jacket, like you're the last person on earth. What they knew that I did not know at that time was that they had survived the 70s, the inflation of the 70s. I came in early 90s, Mr. Hotshot, inflation's going down, interest rates going down, internetboom.com, all that kind of stuff. So I had no idea what these old timers were talking about. And they would just grab me and say, beware inflation, it is crazy, gold, 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 So I would just kind of laugh at them. But now I understand. Funny how you get older, you start to understand the wisdom of the old timers. Anyway, a lot of the retail investors who are interested in gold, they're just chasing action. You have a lot of smart retail investors, but a lot of them are just chasing kind of money flows. But central banks, remember, central banks are buying roughly 70 tons of gold a month. Pure institutional demand, unrelated to retail hype. And I would tell you that the finance ministers of these central banks are not only the smartest investors over time in aggregate, some of them are dumb, but over time in aggregate, they're the ones who write the rules, okay? Now, the reason they are buying, and I've talked about this before, but it is just a staggering number, and as an American citizen, it's important for me to share this with you as a fellow American citizen or a Western citizen. A lot of folks from Australia, Canada, England, France, Germany, listen to our stuff, South Korea, Singapore, wherever you're from. If you're interested in the success of the West, but especially an American citizen, you need to hear this. I'm going to quote, the Congressional Budget Office projects that interest payments will total $892 billion in fiscal 2024, rise rapidly throughout the next decade, climbing from $1 trillion in 2025 to $1.7 trillion in 2034. Imagine $1.7 trillion a year in interest payments. I mean, my goodness, it's already at $1 trillion, which was where we're at right now. We're already paying more in interest than our national defense. At 1.7 trillion, we're paying more in interest than our national defense and a bunch of other things. So look, that's why central banks are buying gold. That's why central banks are buying gold. Because basically what they understand is really gold trades based on debt. That's actually a bigger driver of gold than anything, whether people believe the U.S. will credibly address its debt problem. That is a bigger driver of gold over time, whether we will credibly address our debt problem. And every time I look at Washington, I think to myself, there's no way. There's nobody serious on either side No one's serious about this topic. Nobody even talks about it anymore. But believe me, this is like being in a cage with an 800-pound gorilla. The gorilla's sleeping right now. But when that 800-pound gorilla wakes up and wants to dance with you, it is going to dance with you. That's what this debt is, okay? It's an 800-pound gorilla, and we have locked ourselves in the cage with this 800-pound gorilla. And when he wants to start dancing with you, you're not going to be done until he says you're done. Trust me when I tell you. Now, here's something that very few people know. Little known fact, okay? Gold ETFs make up just 0.17%, less than 1%, 0.17% of U.S. household financial portfolios, which is well below gold bull market levels. So as this gorilla starts to wake up, as professional investors keep moving further into gold, if ordinary investors nudge their allocation even up modestly, it will add significant fuel to this rally, to a rally basically many had already assumed had already peaked. Anyway, that's all I have for you today. Have a wonderful day. I'll see you tomorrow.